Wow.
And one not sellable.
Wow.
So I have 5. I wanted to know. And the 6th one collapsed twice.
Wow. Wow. I'll talk to you about gifts later. Hi there. Yeah. We were at the Remax holiday in Mexico, but I got back. I was working yesterday. Yeah. Yeah, everyone's back. Yep. Yeah, exactly. You've been selling lots of businesses, which is great.
Yeah. No, I did this because this one, they wanted to buy a house later.
Yeah. Yeah.
So when it is corporation, when I do remuneration disclosure, who I should disclose to?
The buyer. The buyer. So
The name, the buyer is corporation.
Yeah, so
I have to put the corporation.
Instead of Tom Smith, you put ABC Pizza. So it doesn't matter whether it's a company or person. You just put their name, the name of the buyer.
And this deal sheet, the calculator is wrong.
Is it?
Yeah, I put like 3.5%, and it calculated 164 something, but it will be 185 something.
Okay, so we'll tell Hetty when the meeting's over. We'll go show her because she did it.
And then Allison emailed me, why you without your commission?
And welcome to what?
So Zini, you got a listing. Is that a stranger or a friend? Oh, his own house? Yeah, I think he told me he's gonna buy a house or something like that. Is that his principal residence? Yeah. Okay. Well, good. That's a, yeah, the whole process, getting it on MLS and getting the photos and getting appointments from agents. That's good. So is that your first listing, or you have one already? Okay. We can. Zena and I will watch it. I wanted to watch it.
She's 6. 2 thoughts for today. First, about 10 days ago, maybe 15, I recorded a short video, 8 or 9 minutes long. We sent it to about 4,500 brokers, and it's titled "Disruptions in Real Estate is Meaningless, and What Does That Really Mean?" And it's for broker owners. I don't know if your broker owner received it. You might want to check. Did your broker owner receive Mike Ferry's message on disruptions? If not, send us an email and I'll have that sent to you or to your broker manager. It's a very important message for your broker owner managers because it's designed to benefit you in being more productive. Okay. 2 weeks ago, our longtime superstar coach, Gayle Weinberg, called me on the phone and she said, Mike, could you do a little message for us on productivity versus being busy? And I said, well, I'm not sure what you mean by productivity versus busy. She said, well, I want to make sure that all of the clients I'm coaching are productive during the months of December, January, instead of busy, because, this is the busy time of the year. This is the busy season that we all experience. So I started thinking about it, and I thought, well, okay, we're talking about a time management issue. We're talking about a scheduling issue. We're talking about a discipline issue. We're talking about the ability to follow a schedule. The ability to completely block out all the interruptions that take place daily in real estate. So I want you to listen, because the message today is a little shorter than normal, but I want you to listen. I wrote down productive activities for a real estate sales agent who has the ambition to do deals and to do business and make money. which only represents half the agents in the industry, by the way. I said, okay, what are the productive activities? Well, first, role play and practice. Because without role play and practice, you can never get good at what you're trying to accomplish. Second, of course, is prospecting lead generation, which we hate to hear the words, but guess what? It's part of the sales process. Third productive activity, of course, is the aggressive lead follow-up, going after those leads and trying to get those appointments. Fourth, of course, is the pre-qualifying process, making sure that that buyer or seller you're going to invest your time with has the capabilities, the desire, the motivation to sign a contract. Making a strong listing presentation. The competition is fierce for listings, and if you're not going to be better than those that you're competing against, you're going to lose most of the time. Obviously, strong showing presentation skills. Instead of, this is the living room, when you walk in the front door, if you chose this house, how would you place your furniture? Okay, would you keep the colors of the walls as they are, or would you change them? So you have to make the showing presentation a productive activity. Obviously, negotiating contracts for those buyers and sellers you're bringing together. So what do we have? 1, 2, 3, 4, 5, 6, 7, what I would call production activities. So the question I wrote down is this: what percentage of your day?
You should listen to the speculation tax presentation, don't you think? What's that? Okay. Well, it's just the first 30 minutes.
Or something which I don't know what you're looking for, etc. Playing with your files throughout the course of the day. In constant communication with agents that don't do anything in the office sitting next to you. What types of activities are you involved in? You have a choice: production, being busy. The choice is yours. What we want to do is help you understand that making the right choice makes a huge difference in your life, in your holiday season, and in your first quarter of 2019. Make the right choice. Last thought. Next week, I think
That's
it's
good.
sometime.
Okay. Grant, talk about speculation tax. Who here knows anything about speculation tax?
It's a complicated thing.
It's a complicated thing. So there's your background. All of us start at almost zero.
I see you got a lot of people here that are interested. Okay. So the speculation and vacancy tax actually is effective January 1st, but is retroactive to January 1st, 2018. And so it'll be subject to properties for 2018 as well as 2019. Most people don't know that. So what is the speculation and vacancy tax? It's an annual tax paid by owners of residential properties in their designated taxable regions of British Columbia. So basically, it's all of the Lower Mainland, including the interior, excluding Bowen Island, and for some reason, one of the politicians lives in Lions Bay. Does not include Lions Bay. Very unusual.
Has it been voted into rules now? So sorry,
Tell
the areas again. The areas are
everywhere in the Lower Mainland.
Yes.
Right to the Mission.
Okay.
Chilliwack, the Okanagan. It excludes.
It's on.
It excludes. We'll have a slide on that.
Okay.
It's designed to discourage housing speculation.
So 1 second, when you're plugged in, right, please. Yeah.
Oh.
Because we video it.
So it's designed. Vacancy tax is an annual tax paid by owners of residential properties in designated taxable regions of British Columbia. It's designed to discourage housing speculation in vacant homes in BC major urban centers. So more than 99% of British Columbians are expected to be exempt. So it's really targeting 1% of the population of BC. If you're not eligible for an exemption, you may qualify for a tax credit. So it's interesting, they tax you and then they give you back money. This is the provincial tax, while the City of Vancouver is an empty home tax. So one is provincial, speculation tax is provincial, one is regional. So your clients may be subject to both. Important to note, if you own a property in Vancouver, you may be required to pay both taxes. Municipalities within the Capital Region District, municipalities within the Metro Vancouver Regional District, excluding Bowen Island, the Village of Lions Bay, and electoral area A. UBC and University Endowment lands, the City of Abbotsford, Chilliwack, Kelowna, West Kelowna, Nanaimo, District of Mission, District of Lattsville. I'm not sure where Lattsville is. I never looked it up. Thought Glenn would know for us.
I think it's in the Victoria area.
Properties that are exempt, excluded, are Indigenous nations, municipal regions, districts, governments, and other public bodies, registered charities, housing co-ops, and certain nonprofit organizations. So most British Columbians will be exempt from the tax. You have to live in your home in 2018. So this is for 2018. As their principal residence, or rent out their home for at least 3 months of the year. That's only the 2018 rule. The 2019 rule is much more rigorous. Short-term rentals for periods of less than 1 month do not count for the 3-month rental, just like in the empty home tax. The tax amount for 2018 is the same for everyone. It's 0.5%, whether you're a resident of BC or of Canada, or whether you're someone from outside of the region, you're not a citizen of British Columbia or Canada. Any questions on that? What does this mean for 2019? Most British Columbians will be exempt from it. You have to live in your home as their principal residence and rent out their home for at least 6 months of the year. So three months for 2018, 6 months for 2019. Again, short-term rentals for periods of less than 1 month do not count for the 6-month total. The tax amount will be 2% for foreign buyers and satellite families. And I'll give you a definition of a satellite family, because that includes many people in that situation that are foreigners with one family member living here. And 0.5% for Canadian citizens or permanent residents. Any questions on that?
Yeah, what tax amount? What do you think
The speculation tax?
Yeah.
The speculation tax is a provincial tax on houses that are deemed empty. So if they're not occupied in 2018 for at least 3 months of the year, then they're subject to a 0.5% of BC assessment value, payable on July 2nd of 2019. Okay? And for 2019, you have to have lived in the house for 6 months. Otherwise, it's deemed as empty, and it's considered speculation investment, and therefore subject to the tax. 0.5 if you're a BC resident or resident of another province in Canada. Has to be declared by the owner. So in March of this year, every owner, they're going to send out to every owner, according to title, will get a packet that they'll have to declare their, whether it's speculation or not. Have they lived in it? Has someone lived in it for 3 months in 2018? And is somebody going to live in it in 2019 for 6 months?
Can I interrupt? Well, you're gonna, every owner, if you own anything, you're gonna get one per person, per owner, not to the house, but so for example, Hetty Ting, I'll get a notice to Hetty Ting. It'll list out all the properties I own. So if I own 5, it'll list out all 5, and I have to declare for all 5 of them. And it's due February 2019. And you should get it mid-February 2019. So if you don't have it, call the government and ask for your package.
Yeah, so you both, if you've got 2 people in title, which is common, both of you have to make the declaration. So what is a satellite family? An individual or spousal unit where the majority of their total worldwide income for the year is not reported on a Canadian tax return. So that would be a common situation where the husband's living in Asia, making lots of money, and sends a spouse over here with children. And so that would be a satellite situation. Okay. What is the declaration for the speculation vacancy tax? If you own a residential property in one of the designated taxable areas, you will receive a speculation and vacancy tax declaration letter from the province. It will list out all the residential properties you own, just as Hetty said. It will instruct you on how to complete your declaration. All residential properties owners in the designated taxable areas are required to complete the declaration in order to claim any relevant exemptions. So if you don't complete the form, if your clients don't complete it, then they'll be subject to the tax. Just like you have to do the empty home declaration, if you don't do that, it's required in order to sell it. We can't sell your property for you as lawyers unless that's been done. What happens if there are multiple owners on the property? Each owner will be required to complete the annual declaration. The tax will be divided among each owner based on their ownership share. The tax will be levied on the owners who own the property as of December 31st of each taxation year. So that's significant for your sellers. If they sell November, it's the new buyer that makes the declaration, which is bizarre because they don't know what happened in 2018. But that has to be done.
Can I go back a little bit? Like if they buy in,
You asked me the last one.
just if you can explain one more time, like if my buyer, they buy now, who needs to do the declaration?
If they buy right now, the buyer will have to make the declaration because it's whoever owns the property as of December 31st of the end of that year. So I imagine there will be some declarations that will come into place that haven't been done yet in the sale of properties. The seller will have to make a declaration to the buyer on how it was occupied in 2018. For the empty home tax, that declaration has to be done. And now they'll have to make a declaration for the provincial tax called speculation tax and vacancy tax. So there'll be another stat deck that the seller will have to make. So the buyer knows what happens because we have to protect your buyer. Because if they say, well, it was occupied, and then the province does an investigation, which I'm sure there's going to be investigations, just like there's investigations for empty home tax, and they find out it wasn't, your buyer will be subject to that. So we need to protect your buyers. So there will be stat decks that will be done. The sellers will have to make regarding the occupancy of the house that's being sold. Glenn?
I was just clarifying. So whoever owns the property on December 31st is the one who gets a tax bill. So that could be, it's interesting because it could be two owners later because it could sell in January, July, and August.
Exactly.
And then the December 31st owner gets the bill.
The December 31st owner is exempt. This tax is exempt for the first year of a purchase. If you pay property transfer tax, is exempt. So this is completely exempt for the first year of purchase.
And every year, just
Every year. Anytime you buy, first year is exempt as long as you pay property transfer tax.
I'm not aware of that. I haven't read anything about that. That's all unknown to me. So my disclaimer at the end does not include Hetty's comment. So when is the speculation and vacancy tax due? It's owed on July 2nd, like all property tax. Okay. If you are charged the speculation and vacancy tax but don't pay what you owe, you may be charged a penalty as well as interest in addition to the amount of tax you owe. So pretty straightforward, right? Government likes to get their money on time, so they charge you. What if I pay an exempt, but I'm exempt, will I get a refund? Yes, of course. The government always likes to give you back money. It just takes a long time to get it. You'll be able to receive a refund of up to 6 years from your payment date if you later learn that you are exempt. You will need to contact us to request the refund or credit, which will be applied to your next year's speculation and vacancy tax. So that'll be a whole nightmare of paperwork. So it's interesting how government likes to create a lot of jobs for people. So if you have clients that are looking for employment, they could get a job right now in the province of British Columbia to manage this nightmare of paperwork. How do you do the tax credit? How do the tax credits work? So this is significant because they are taxing you and then they're going to give you back some money if you don't own a very expensive home though. So BC owners are eligible for a tax credit of up to $2,000 on secondary property. So lots of people own vacation homes, right? Whistler, Interior, whatever, right? This exempts an owner on an otherwise taxable home assessed at up to $400,000 or provides a $2,000 reduction in the tax payable on your home assessed above $400,000. For example, if you own a property of $500,000, you would only be taxed on $100,000. Or if it was worth $1.4 million, you'd be taxed on the $1 million. If the home in 2018 was not occupied for 3 months, or in 2019 is not occupied for 6 months. So if you own second residence as a vacation property, then this comes into play. Okay? The credit limit is to $2,000 per owner and $2,000 per property. In the case of multiple owners per year, the tax credit cannot be carried forward or transferred to a spouse. Any questions about that?
This is based on 0.5%, correct?
It is, yeah, if you're a
So next
BC
year
owner.
1% or 2%?
Say that again?
Next year will be 1%?
No, for BC, it's always going to be 0.5, and Canadians. Yeah. The foreign owners and satellite families can claim a tax credit equal to 20% of their BC income to reduce the 2% speculation and vacancy tax owing. The tax credit cannot reduce the tax rate below the rate for an equivalent BC resident. 0 on a principal resident or 0.5 on other properties. Unused BC income may be carried forward for up to 2 years or transferred to a spouse. The tax credits are prorated in 2018 when the tax rate is 0.5% for all owners. Any questions?
So just so you understand that, if someone lives in the house, they still might have to pay the tax. Does everyone follow that?
Mm-hmm.
No.
You want to explain, Grant?
Well, you can since you raised it.
Because see, like, everyone thinks that it's just for vacant homes,
Yeah.
but it's for people whose spouse lives in Asia. If they're living here, they have to pay the tax.
Because they're considered a satellite family
So
by
satellite
definition.
families have to pay the tax.
Because based on where they earn their income.
So there's
If the,
this satellite family, how much? 2%?
2% of the assessed value, BC assessment value. So on $1 million home, that's how much? $20,000. Yeah. So it's significant money.
That's right. Market
2% on
Two-
2% of $2 million.
Well, anything above the 400, well, above the, they don't get, the only way a foreigner can reduce the amount, the tax credit is equal to 20% of their BC income. So majority of people that are satellite, the person that's living here is not making any money. The money's all coming from offshore. So unless they have a simple job here or something, they're going to be taxed at 2% of the assessed value. So if the house is worth $1 million, they have to pay the BC government $20,000
Because they live in the house, they own, but they don't make money.
because they're foreigners. Yeah.
They're foreigners.
Because they're considered by definition a satellite family. So the money that they make is offshore, and they have a partner that lives here with children, usually, then they are subject to that tax.
What if they're working?
Then they can claim a tax credit equal to 20% of their BC income. This is for non-Canadian residents. So if you're a Canadian citizen, then you're not a satellite owner. Okay? So that's the key thing.
So the thinking is that people who live here need to pay taxes for our roads, for our schools, for all these things. Those people living here don't pay any taxes.
Because they're being taxed in the country that they live in abroad.
Oh, so the 20% of their wages will come off of the 2% that they own.
Yes. The tax credit equal to 20% of their BC income to reduce the 2% speculation. So if they make $100,000 a year, good for them. So $20,000 would be used to reduce the 2% that they have to pay in their speculation tax.
Which would be even.
They would even if the house was $1 million and they happen to be making $100,000, which would be,
$100,000 they would pay taxes in Canada, so we're happy.
yeah.
Who don't pay taxes that we're not happy about. So basically, you've got a vacant home in Burnaby that would be subject to it now, and you've got people who live in the house who would be subject to it now in any city.
Can they pool all of the incomes from all the people living in the household?
But members by individuals who are on title. No, because this is they own the property, right? So it's by title
So
ownership.
only by
Yeah. So it doesn't
Question,
matter the
if
children.
they don't own it, oh, they still have to pay it.
No, it's whoever owns the property pays it.
Who owns it? Like, I own the property and I'm renting to a Chinese family.
No, because then it's rented.
It's
It's only about satellite family.
There's
So
two
if
different
my
issues.
parents buy a house,
Buy a house.
so my parents buy a house, they live in Taiwan,
Which they did.
and they let me live in it.
Which they
Then
I'm a
it's rented.
satellite family. So
No, but
now
you're
there's-
no, but you're a Canadian citizen, are you not?
Let's pretend I'm nothing. I am a foreigner. I don't
Oh,
speak
you
English.
are.
So now because my parents bought it, I'm not the owner, my parents are. They're making money in Taiwan, not here. I'm a student, I'm 16. I live in the house. Now my parents have to pay 2%. It's only for satellite families. But if my parents who bought and went back to Taiwan rented out to me, I'm not their daughter. They rented out to me, I rented out to Megan. Now Megan's not a satellite family, so that doesn't count. It's rented
For 6 months or longer.
for 6
Yeah.
months longer. It's what they're saying is all I have to do is a satellite family only. So within the family.
So if you own property, a secondary property, and you rent it out more than 6 months of the year, no issues.
So what about if you rent it to your wife?
Doesn't matter.
It's not a rule about that. Yeah.
Is it really?
For cheap.
They have?
They have a rule about renting to the family, yeah. You can't do that.
So you see a lot of satellite families renting to their
Looks like that.
friends' kids. So,
Yeah, I'm sure there's loopholes, right?
so you rent to their family's
Mhm.
kids, and their family will rent to your kids.
For the vacancy tax, empty home tax, I mean, you do that. You just have to have a rental agreement that you can show that that's up to 6 months of the year. So yeah, you can do.
And Hetty was reading about that
I
there,
call the government. Because this affects my family and all my clients tremendously, so I just call the government. As long as you have a rental agreement, the rental agreement does not have to have a dollar amount. Therefore, I can rent it to my niece for $0.
no, there's a rule about the fair market rental value as well.
No, that's a different thing. I call the government, that's what he told me.
So we're talking about municipal and provincial here.
I call the speculation tax department.
So that's
And what
provincial.
They told me was that as long as there's a rental agreement between the two parties, and there's no set dollar amount value, it doesn't need to have a dollar amount value, as long as there's a rental agreement. I don't know how true is that, because I emailed them again waiting for another reply.
We won't know until it goes to litigation.
To my knowledge, there's two rules. One is that you can't rent to your spouse, right? Because that would make it a fake rental agreement. And then there's also the fair market rental thing that it has to be, because you can't rent it for $50 to your, so that's because that would stop that. So that those are the two issues. But I have only read for 1 minute about it. So keep going.
But there's nothing on the BC site regarding that. In regards to the speculation tax, there's nothing in writing on the BC website for speculation and vacancy tax regarding what's being discussed right now.
Interesting. Okay.
Who will be the best person to recommend them to contact? Who will be the accountant or a lawyer? I don't want to talk to them about that.
Smart decision.
Well, I think you just depends, right? Like I can provide advice in regarding that because I've read everything that's available online regarding it. And whenever legislation is new, there's always things that have to be ironed out. And so, so more stuff will come in the new year regarding this when it comes into play. And there's lots of people impacted by it. Lots in regards to 1% of our population. So 3,000 people, 4,000 people in the Lower Mainland.
When people in Burnaby get a bill for $20,000 for their empty home, get the newspaper. Because most people don't know that. Like, how many people in our house in this room here knew that people in Burnaby can get a bill for $20,000?
I didn't know that.
And we're realtors, we don't know. How about the people who live in
Yeah, who don't think at all about any of this stuff.
people who live in Calgary?
Well, that's caused meetings I've been to this week, like the Okanagan Valley, the real estate market has died this past summer because the people had no idea what was, all the Albertans that buy in Okanagan have no idea what's happening with the empty home tax and the speculation tax. And so they don't want to be hit with all these taxes by owning property in BC. Yeah. So how did the tax credit work? Other Canadians, non-BC resident Canadians will be eligible for a tax credit based on that income claimed in BC. The tax credit cannot reduce the tax rate below the tax rate for an equivalent BC resident. 0 on a principal resident and 0.5 on other properties. Unused tax credit may be carried forward for up to 2 years or transferred to a spouse. The tax credits are prorated in 2018 when the tax rate is 0.5% for all owners. So again, if you're a non-BC resident and you own property in British Columbia, you are subject to the tax. If the house is not occupied up to 3 months in 2018 and 6 months in 2019. Okay, and they can only reduce that 0.5% if they've made income in BC, just like a satellite family.
That's massive.
It's huge because there's lots of vacation properties owned.
Example, the Albertans that have property in Kelowna, 400,000 would be 20 grand. And because their income is in Alberta, they're not exempt at all. 20,000 still applies, correct?
Yeah, but they're not going to be paying $20,000 on $1 million property. They're paying 0.5, which is what, $500? No, $5,000. $5,000 on $1 million home.
It's different for foreigners compared to Canadian citizens.
2% for foreigners, 0.5% for BC residents and Canadian citizens. So anyone owning property outside of BC, that lives outside of BC.
Even in the country, they're Canadian, they pay 0.5.
Correct, if they're Canadian citizen, yes. Mm-hmm. Good point. Yeah. Any questions on that? So good idea to become property managers as realtors, right? All your clients that need that. So there are specific exemptions and they're very detailed. There's many, many things that come into play. And so I've just listed them out here. If you want more information, I can provide that for you by sending me an email. But principal resident exemption, rental exemptions, exemptions for hazardous or damaged property, medical exemptions, the list goes on. Spousal separation exemptions, exemption for properties with rental restrictions.
I get called on that one. For Vancouver vacancy tax, same thing.
So if your firm doesn't allow rentals or you can't rent because it's maxed out, you are exempt of the tax.
Yeah, because the empty home tax is similar.
No matter where you live. I mean, if you're Canadian, satellite, or...
Yeah.
I also get asked about number 7. See, the bankruptcy exemption, people are under foreclosure. That doesn't apply then as well. Just like for the Vancouver one says if it's under a court-ordered sale, doesn't apply. And here they use the word bankruptcy exemption.
Yeah.
Because it can't be rented. See, the idea is the government wants land to be rented to make housing available.
So the empty home tax for Vancouver applies to bare land. The provincial one does not apply. So you have to differentiate the two. Because Vancouver wants you to build on your bare land, not keep it bare. And the provincial government is saying, no, we won't tax bare land. There isn't one. So,
Go back to the other. See, number 5 is what I was talking about. Year of acquisition exemption.
okay. Okay, so I have to look at that one specifically.
Empty for the first year, you don't have to pay tax. Interesting.
There we go. You read up. Good job. Okay, just to give you an update regarding my services, I actually do have now Asian translation, so Cantonese and Mandarin available.
So what Teddy was just saying, like, so if you just bought a condo or house and you leave it empty for the first year, that's your example for that?
That's what Hetty is saying, but I haven't read that specific one because that was very pertinent to her. So she's read that. So we'd have to, based on what she said, believe what she said, but I haven't read that. I adapt. Yes.
Well, the question is that at the mortgage also we get a lot of questions regarding all this related. I personally don't enter into this. I tell them that take expert advice.
Yeah.
Can I divert those calls to you?
Absolutely. Yeah.
Yeah, and then you can answer them like this because it's a very complicated thing, and you know.
Exactly.
We don't want to like give a comment on that, like that.
Yeah.
Okay, definitely. Yeah.
Yeah, so you basically know that you know something about it now. All of us started almost at 0, and now we know a little bit. Thanks, Grant.
Okay, you're welcome. Thank you.
Very good information.
Okay. So how many?
34. Okay, so we've got a little bit of time. So the first question is, you're the seller's agent, and the buyer does not have an agent, so the buyer's unrepresented. So give me examples of when you tell the buyer, who doesn't have an agent, to get legal advice.
Before you do anything, when you meet them.
The answer is never, right? Because you only tell people to get legal advice who are your clients. Think about that, right? Because the real estate counsel wants you to tell them, go get your own realtor. Remember, that's on the form, risks of unrepresented. Go get your own realtor. But that's only your job is you don't tell people to go get legal advice because that's the realtor's job to get legal advice. Or if they go see their accountant, it's some complicated thing, go see your lawyer, right? They get legal advice. But if the party is not represented by you, you don't tell them to get legal advice. Does that make sense to everybody?
Yes.
Okay, so we just had this situation 2 days ago. Buyers working with an agent in our office is working with a buyer, finds this property, loves it, writes an offer, can't get their mortgage approved, so they cancel the sale. But the agent realizes, wow, this would really work for Tom. So after the deal is canceled because the mortgage is not approved, calls up Tom and says, Tom, I know you're looking for this house. I think you should look at this when you love it. Tom looks at it, loves and wants to buy it. So Tom says, yeah, I want to put an offer in. Then buyer one calls back and says, I can now get a mortgage approved. I still want to buy that house. Right? Do you follow that? So you've got now the original buyer and the second buyer. What do you do as an agent?
Was there a cancellation?
Well, I don't know.
Shows the buyer agency agreement sign? Because you need buyer once authorization before you can work with the client too for the same property. If you don't have the exclusive buyer agency agreement.
But you are the seller.
No, you're the buyer's agent.
Yeah.
You have to let them, both of them.
You have to have one that agreed to get fired.
Correct.
Yes.
That's the correct thing.
Yeah.
Because that's the dual agency. You can't help two buyers because you can pull up that form, Megan. I'm not sure if you can, because remember that's on that form that I forget what the form's called. It's called I don't know the name of it.
The exclusive buyer agency agreement covers that. Specifically, that it's not against the rule to work with separate buyers on the same property.
But what I'm talking about is this here is client info agency disclosure, the top one, under
But the new rule overrules that.
yeah, just go up higher. Go up higher. It's the click in the word dual right up there. DU.
So it actually happened with an agent in the office?
2 days ago, that exact scenario. Right here, this one here.
What's the agent then?
I'm gonna tell you after we see it.
It's hard to pick one.
Conflict agreement regarding conflict between clients, because now you've got two buyers who want to buy the same property, so you've got a conflict. Because who are you going to help? Like you guys are saying that, do I help buyer one or do I help Tom? Right? So that's why you have to do this. And if you go down farther, it gives that scenario. Go down farther. Go down farther. Go up, no, right up here. Potential buyer and potential buyer. See, they're both potential buyers who can be released. Right? So in this case, they actually fired both buyers because they'd worked with both buyers in the past, and they felt if they picked Tom, Bill would never buy a house with him again. If they picked Bill, they'd lose Tom as a client. So they explained to both clients, listen, this situation, this is what happened, this is what happened. I want to keep you as a client, I want to keep you as a client, so I can't help either of you in this situation. So that's what their decision was. But you also could choose to fire Tom and work with Bill. It's up to you, but that's the scenario.
But don't they have to agree to that?
Yeah, that's what they have to sign the form.
And if they don't sign it?
Then you have to fire them both. If you want to keep one, this is the form you use, right? This is the form you use.
And if you fire both,
Then they go get their own agent and write an offer type thing, right? Does that make sense?
Just call me. I'll give you a referral.
Can you just like fire one and then refer the other one?
Yeah, exactly. Which is what they did. They referred one, and one was an experience. Like they both are experienced buyers. So the one buyer actually was an agent. So he wrote the offer himself. The other one they referred. Okay, so just in case that happens to you, I was thinking about this question because I saw it written down. All of us work with buyers and sellers. What do you think? Because like if you want to find buyers, you want to find sellers, you have to meet their needs, right? Like, why does someone go to Superstore to buy things as compared to Save on Foods or the corner store? Like, why do they do that? And so they're getting their needs met. So we have to ask ourselves the questions: why are they coming to me as compared to the realtor across the street? So I just wanted you to list off 2 things you think buyers are looking for when they're looking for an agent, and we're going to talk about 2 things sellers are looking for, just to help you think about that process. Because when you talk to buyers and sellers at an open house or listing presentation, you have to be meeting their needs. So what comes to your mind is something a buyer is looking for?
Service.
Okay.
Service.
Yeah, they're looking for service, someone to help them through the process. What else do you think is something else that buyers? Expertise. So there's 2 different things. You see the difference between, because I can sort of help you. I could help you get to Tacoma, Washington, but I've never been there myself. So I could help you get there, but would I be a good help? Not really, because I've never been there, right? But if you're an expert, you've been to Tacoma, Washington many times, you'd be an expert in helping them get there. So do you see the difference between those 2 things when you're talking to a buyer? Because pretty well every realtor out there could help someone buy a house. Is that true? But some would be way better at it than others. Helping someone buy a house in Kamloops? Nobody, well, you'd be good at it. The only person in this room would be good at it would be Tom, right? Besides Tom.
8 years experience.
But the rest of us couldn't help somebody buy a house in Kamloops. You see the difference there between help and being an expert? Okay. Now just think of 2 things that a seller's looking for, unless someone has something quickly they want to say about an alpha buyer looks for. Anything else? Those are 2 good ones. What are 2 things sellers are looking for when you're talking to a seller?
Expertise.
They're looking for expertise, yeah? So you have to talk about that when you're talking to a seller about what makes you an expert, because a lot of people like experts.
Can I say something? I love the listing because someone said, I'm an expert in a down market. There was another listing that I'm an expert in Vancouver versus I was selling in Coquitlam. So I said, why did you choose the other agent? So one was, this person is expert selling in a lower market.
Wow.
And another one, this realtor was expert in selling apartments in Coquitlam.
Yeah. See, so both were, isn't that, because you can be an expert in down market anywhere in the Lower Mainland, and then an expert in Coquitlam condos.
The board in Kamloops doesn't allow you to say that you're an expert.
Interesting. We don't have that rule here. So you can all be experts in your own little whatever you want to be experts in.
I want you to know that I call every single time when I go to an appointment and they choose to work with someone else, I call them.
Yeah, and then you find out. Yeah. But all of us should be saying that because we're sort of in a down market right now. So you'd be saying, I'm an expert in a down market, because the other people aren't saying that. And Camille's likely saying that now, so you got to start saying that as well. Experts in a down market. Yeah.
So regarding the question about whether your condo allows for rentals, only if the bylaws were in place for no rentals as of October the 16th of 2018. So if it's a new condo that doesn't allow rentals after October 16th, 2018, you still pay the speculation.
So no rental restrictions, no rentals, that's it.
Yeah, so buildings can't pass a rule to get around that, is what basically they're saying.
So no more this bylaw, doesn't affect
No, we're just talking about the tax being applied. Buildings can still make rules about rentals and no rentals and all those things.
So before
October 16th, 2018.
anything after is like doesn't apply.
It doesn't apply. Even if it's in place, then you still pay the speculation tax, even if the condo doesn't allow you to rent.
So in other words, you don't buy in a building that says no rentals and say, oh, I don't have to pay it anymore. You still have to pay it because you knowingly are going to buy in a building that has that.
And Hetty's true. If you, the year that you acquire, you don't pay the speculation because you pay PTT. Or if you're a first-time home buyer, you don't have to pay it. Thank you.
Okay, what's another thing to talk about? You know, in our office, somebody becomes a PREC once a month, I would say. I've got around 200 days once somebody becomes a PREC. So realistically, because the government changed the rules on PREC on January 1st, 2018, right? So if any of you are thinking of becoming a PREC, there's really only a couple of reasons. Anyone in here a PREC? Don, are you a PREC?
Yes.
Don is a PREC. So basically, in my mind, the only reasons to become a PREC are about 3 reasons. Number one, I'd say at least half people who are PRECs are only for one reason, just for prestige. They say, well, I want to have PREC because it sounds important, it sounds prestigious, right? So that's a reason for some people. Second reason is if you spend less money than you make, in other words, you make 200,000, you only spend 150, so at the end of the year, you got $50,000 sitting in your bank account, then you can use that, what's called pre-tax money, to invest in real estate and do a couple other things. And number
What's
3,
the percentage?
what's the percentage of what?
How much do you have to save?
Well, there's no answer to that question because it's, you see, because when you, just a simple explanation. So when your company, your PREC makes money, like let's say your company makes $100,000, it pays tax at around, I think the numbers, let's say, I think it's around 15%, but let's just say 10%. So the PREC pays 10% income. So now your PREC has got $90,000 in it. Then if you pay that money to yourself, then you pay another about, no, dividend tax, it's a little bit over 20% tax. So then now you've got 90,000 in your bank, but then you pay 20%, so you're down to 70,000, right? Because you got 90, paid 20% approximately down to 70,000, which is the same as if you just got the money yourself personally and paid your 30% tax, you're at $70,000. The difference between company to personal compared to directly to personal is between 0.5 and 1%. So in other words, the savings doing PREC to personal on 100,000 is around $1,000. So it's not a big savings, but the costs involved in having a PREC are huge. The only advantage would be is if you, so what you happen is you get $100,000 from your PREC, the PREC pays tax on it, they've got $90,000 left, you only take out $30,000 and you pay tax on $30,000, which is, you know, whatever that amount is, $1,000. So now you've got $60,000 still left in your PREC, which has not been taxed at the personal rate, and use that money to buy a real estate or to establish family trusts, this type of thing. So that's where it is, where there's, you know, you have to, I'm thinking you need $100,000 or more of not spent money in a year to make it worthwhile. And the other thing, it would be an established family trust, which is a complicated process involving lots of costs and legal things, right? So I think that if you're not making over $250, $300 a year, there's no point in doing it just because of the costs involved. Like it's expensive, filing tax returns, having bank accounts, 2 licenses. It's very expensive. It's very expensive. You know, so a realtor in our office just forgot to file their PREC annual report with the government, and they got their PREC what's it called, deregister or something like that, Megan. So Megan's been working for the past while. We charge them a lot of money to get their company reactivated. It gets dissolved. The company got dissolved.
Yeah.
They didn't file their annual report themselves. They have to activate it through the advertising in the BC Gazette. Big hassle. Megan.
File all the annual reports that you missed.
Megan's going through the process. Okay, so PREC. So you have to think about that, but you might want it for prestige reasons, right? Remember that.
Some people do it because they don't want to pay CPP.
Well, that's what I'm talking about. The difference is, well, if you leave your money in your corporation, you also don't pay Canada Pension on that money. Because see, when you pay it out personally to yourself, you pay Canada Pension.
Pay themselves dividends, so they don't declare CPP. They don't have to pay CPP, which is double for us unemployed. But when they go retire, they have
no Canada Pension. Okay, so this happened to realtor in office yesterday. His client calls him. He's at the bank in Mexico, and he needs to transfer the money here. So what should have that agent done so that the client didn't panic when they're at the bank in some foreign country? What should you be doing when you know your customer doesn't live in Vancouver? Go to deposit info under help and buyer. You have to think through this process. My buyer lives in da 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 da. They're not going to be able to give me a check. Let's think through this process, right? Well, you have to be able to do a photo deposit. What do you need? A Canadian bank draft or check. But when they live in Mexico, do you think they have a bank account in Canadian funds? No, they don't. No, they don't. Nobody lives out. So that's different. Most people have U.S. dollar bank accounts that live in another country, but most don't have Canadian bank accounts. That's caused the problem.
So when they don't have, what we should do?
That's what we're going to talk about right now. So basically what you should be doing is just go back one step so people see where this is. So under helping buyer, just go back one step. Under helping buyer, there's a spot called deposit info, wherever that is. Deposit info. And then there's a spot called trust deposit info, like that. And so here it is. Where is wire transfer instructions? I'm trying to see that sideways. Is it the very top one? Oh, here it is. This is it here. So here is, you should be emailing this to your client saying, Bill, 3 days from now, when you remove subjects, you're gonna have to go to your bank and give this piece of paper to your bank, right? It's a very simple process so that your customer's not freaking out, figuring out what's going on. So the customer takes this to the bank and just go down in Mexico, yeah. And they can this is called a wire transfer instructions. And here's all the codes that they need, to transfer money to our trust account. Problem's easy. It's a very simple process. So make sure that you do that, right? And up on top here, it's the important instructions to always transfer extra money because we always have that, but every 2-3 months, because the banks always charge fees, What happens is that they walk into the Mexico bank and the bank says it's going to cost you $25, $50 to do this wire transfer. They say, okay, they pay extra $50. But the problem is in Canada somehow, or how the wire money transfer happens, it's always short. Like if they give $20,000 plus the $50 fee in Mexico, it comes at $19,000 and some here because of I don't know what. So that's why I always tell people do extra money, right? So that it's not short.
So you don't actually have to use this overseas. You can still do this same here.
Oh, you can do it anywhere. You can do it in Burnaby if you want, but it's a lot. This is how you wire transfer money from any bank. Yeah. Well, that counts towards the purchase price, the extra money. But if they're in Canada, they should be able to get a Canadian bank draft. So if they live in Calgary, what should you be telling them to do? You've got two choices. If they live in Calgary, they can either do this, or they likely will have a Canadian bank account if they live in Calgary. So then they can just take a photo of the check, right? So then we've got, so Megan, if you can find that. So if you live in Calgary, then you send them this one, photo deposit instructions, that one there. Email this to them. Take a photo of the front and back, all the things. And at the bottom it says, to you send it there, but they send it to the agent. It says, yeah, email the 3 photos to your agent with a subject line, property address you're buying. So it's all there. Send that to the client so they can send you the deposit check from Calgary. Otherwise, they have to courier it here or whatever they're going to do.
That works for bank draft as well?
Yeah, bank draft or personal check.
So after they do this, do we still have to get the physical?
No, because it says somewhere on here, please retain the original check for 45 days. RE/MAX does not want the physical check.
So where it says for the deposit, so you can't put in there to be paid upon subject removal by check in the mail?
Well, that's an agreement between the buyer and seller. Most people wouldn't agree to that, but if the seller agreed to that, yeah, you can. And then the third option, if they bank at Vancity, they can do a direct deposit in the Vancity account, which there's a check there for a Vancity account.
So after they take a photo and email to you, the physical check, we need to get that within.
The client holds on to it for 45 days.
What happens after that?
They can destroy it. Yeah. No, that's the wrong one. Well, yeah, you can. If they bank at Vancity, you can give them this, and they can go into, like if they're in Coquitlam, and bank at Van City, they can take this void check into Van City and make a check from their Van City account, a deposit from their Van City account into this Van City account, you know, that type of thing. Same thing with TD. We've got accounts at TD and Van City, so if they bank at TD, they can transfer money from their TD account anywhere in Canada into our TD account if they know what they're doing. So just some stuff there. Okay, and does that make sense for everybody? Oh, so the other problem that happened, we got a deposit check, and let's say the realtor's name was Bill Smith. It was Bill Smith, something of Bill Smith at Remax is what the check was made out to, right? So why did that happen? It happened because the agent didn't do what he's supposed to do. What are you supposed to do if the buyer? Yeah, right. When the buyer's in the local area here and you're going to be getting a check from them or whatever, you send them, Bill, make sure that you get a check from your bank for $55,000 payable to Remax City Realty and Trust. You send him that text message. He didn't do that, so he got a check made out to him personally, right? Because people don't know what to do, right? So make sure that you always do that so that problem doesn't happen. Okay. You come in the office on Sunday afternoon. This happened twice this week. You come in the office and the alarm is on and you don't know your alarm code and the alarm siren goes off. 11 o'clock on Wednesday night it happened. Yes. And Saturday morning. So what do you do when the siren goes off? Incorrect. That's the answer. The alarm company always calls here. So you answer the phone and say, yeah, I set a false alarm. They won't believe you. They will want your code, your alarm code. So give them the alarm code. Then they don't call me and all these things. And I'm quickly looking at the cameras, trying to find out if the burglar's in here and all kinds of good. So make sure you answer the phone. That's the key thing. And then call the alarm company type thing. The phone number is whatever. Okay, what's the next one? Contracts in a contract. So people like to do this a lot. So when I'm selling a house, I'm the buyer's agent. Tara and Camelia, buyer, Camelia seller, Tara's buyer. I'm the buyer's agent. So I write in the contract, seller agrees to pay Remax $5,000 plus GST, you know, just for easy numbers to use. Completion rolls around and Camelia says, I'm not paying you $5,000. I'm only paying you $4,000 because I had, you know, do this or do that, whatever. I'm only paying you $4,000. Can I make Camelia pay me $5,000?
Yes.
How? Yeah, because I'm the buyer's agent. I wrote in the contract. Seller agrees to pay Remax $5,000. How could I make Camelia do it?
You can, it is part of the contract, it's binding.
Who's the contract between?
Buyer and seller.
Buyer and seller.
So who can make Camelia pay Remax money?
The judge.
The buyer. Because I don't have a contract. That's not my contract. So the parties to the contract can enforce the contract. Right? You think about it, because I'm not a party to that contract. So that's very important to understand. The parties to the contract is the buyer and seller. So only people who can enforce the terms of the contract are the parties to the contract. So I can't make the seller pay me $5,000, even though the contract says that, because I'm not a party to the contract. So that's why it's so important. If I want Camelia to pay me $5,000, I have to do a contract between Remax and the seller's agent and the seller, right? Because that's who the thing is. Because technically, the seller's agent has a contract with the seller, and I have a contract with the seller's real estate company. So that's why it says page 1 of 1. You know, so the best thing to have done, the contract that you should have. Did we lose it?
The computer decided to update.
But anyways, if you look in under helping buyer under commission, there's a thing for commission change. It's called a commission change form. It says, you know, total commission seller gets, total commission buyer's agent gets, and it's signed by the seller. So that's now a contract that we've all signed and you can enforce it. But that's the best thing to use.
What happens if you do a separate contract between the seller and the buyer's agent?
Between the seller and the buyer's agent, okay, yeah.
And then the contract between the buyer and the seller is agreed upon, and they don't sign that the separate commission.
Well, it's not, it's only enforceable if it's signed. Yeah,
So
so,
they could sign the contract, but then they don't have to agree to the 5,000.
yeah, so then it's not enforceable. That's what I'm saying is that don't do contracts within contracts. Because this is what this agent wanted to do. He was selling a property and he wanted the buyer to promise to list the new home with him, right? In other words, you sell a property and he wrote in the contract, buyer agrees to list the brand new home with Remax and Tom Smith, right? So if that house, the buyer started building, the only person that could sue for that to happen would be the seller. So what's the chance the seller is going to sue the buyer to make them list the house with me? They're not going to do that, right? That's why you have to have a separate list back agreement. So if you look in Dropbox, we've got a list back agreement. So I'm just telling you, don't do contracts within contracts. Make sure that they're separate.
One question.
Yeah.
It's about when you helping sell business assets.
Yep.
And usually the commission is really small.
Okay.
And if I want to put like some minimum, like $5,000.
Are you buyer's agent or seller's agent?
Seller's agent.
Yep.
And which contract I am going to use?
Well, when you list the property, if you look through the business listings, that's the problem. Is that sometimes you're selling a business for $20,000, $30,000, like. So what agents do is they don't put down a percentage; they put down a dollar amount. So you put down. What I've seen other agents put down is 10% or $15,000, whichever is higher.
I like that.
I like this.
10% or 15,000, whatever's higher. So in other words, because then the buyer's agent you get 7,000, you get 7,000, and you're not working for $1,500
Yeah.
after
I
6
like
months.
this.
Because one of the most difficult sales we had in our office was an agent who sold a place for 22,000 after 6 months, and then it collapsed in the very end, right? So you spend hours and hours and hours.
So I remember I brought a lawyer to meet you. So the guy asked me to find an office space. And
Okay.
I was ready. So I walked to your office and I said, Glenn, how much I should charge them? I said, do you want me to help? I said, sure. I said, okay, 10,000. So I went to the guy. I was like, we have to charge you 10,000 before we start looking.
Mhm.
Of course not. They got so scared and they walked away.
Well, what you do, I don't remember that exact situation, but when people are looking for things, you can say, and I'll refund that to you when I get paid by the seller's agent. So the seller's agent pays me 5,000, you get 5,000 back. If they pay me 11,000, you get all $10,000 back, type thing. So
Can you go through the question I asked you?
yeah, that's actually the next one on my thing. So basically, what happens when you get an oil tank scan done by the oil tank company, and then the buyer finds out there's an oil tank in there? The oil tank scan says, no oil tank. What happens?
That's a nice one.
So can the buyer sue the oil tank company? Because if you look carefully, the oil tank scan is written such that it basically says, we're taking a guess. Likely there's not an oil tank there. That's all it says, right? We're taking a guess. So it's a complicated process. It's likely the buyer's out of luck, but I don't know that answer. They just have to go get legal advice. So if it's your buyer, you tell them, that's unfortunate that the oil tank company didn't find it. You just have to talk to a lawyer and see what they have to say. What's the most common problem why they can't find oil tanks? Cement. Because what a lot of people do is they put a cement pad right here and put a picnic table on top, and then the scan can't go through the picnic table. That's the cement, right? So that's what blocks it all the time, is the cement driveways, cement patios type thing. How many minutes do we have? What time is it? It's 11:04. Samira, you'll be up in 1 minute.
Yeah.
Our new mortgage person. Legal update. So many agents are getting caught these days not having their legal update done. Like another agent just lost his license last weekend from Friday till Tuesday, right? Because if you don't take the courses, you can't renew your license. So what are the 2 courses you need to take to renew your license? Yeah, right? So you need to take those 2 classes. So he'd take the legal update. He had 18 credits, but he couldn't renew his license. Why couldn't he renew his license?
Because of the other one.
The other course, right? And the next available course was Monday or Tuesday, and that was Friday. So he didn't have a license for Friday, Saturday, Sunday, Monday, Tuesday, right? So don't do that, because the real estate council, real estate board sending you all these emails saying your license up for renewal, license up for renewal. And
You have to take down all your listing signs over the weekend.
I didn't check if he did or not. I sent Megan out to do it. I'm not sure Megan did. Yeah, so
The office should remind us, I think.
we do. We do.
We
We send an email as well. Like you typically get 2 to 3 emails from the real estate council, 1 or 2 from the real estate board, and 1 or 2 from Remax. So you got a lot of emails. So it's pretty hard for you to get to the point like he was. But he maybe didn't read his emails. We don't know.
Most people don't read their emails.
Of course.
Samir, you're up.
Yeah, just
Yeah.
So Samir's a new mortgage person in our office. Harvey Gill uses him. So Samir is on this side, renting some space.
Yeah, the small space shared with Elio Ferrante. The good news is that no more rate hike this time until the spring. So the rates are still steady. 3.95 is the one we usually offer on the variable side and always get discounted. So prime minus 1 is the best rate so far. So it's 2.95 on the insured side. The rates are always we offer the lowest ones. We buy down if the customer is looking for looking for everywhere else. So we offer a pretty competitive interest. We take care of their process very well. Offer them a pretty unbiased advice.
So it's 5 year right now fixed.
The fixed insured side is a 3.44. That's the best one right now from the Host Capital. Yeah, on the insured side, insurable is going to be 3.49. 3.54, so that's the range. Most of the banks are offering 3.69, 74, 3.85.
There's no
Yeah.
more 2 point something.
That's a variable side. This is the fixed. So the variables right now is going around from 2.95 to 3.15, 3.15. That's kind of correct. It's all depending upon how much down payment you have. So the interest rates is completely on the down payment. If you have less than 20% down payment, so that's considered as a insured mortgage. That's subject to the insurance premium that will add it to your mortgage amount. And the lenders like that because they get that safety of that insurance. So the lender loves insurance. So that's the reason they offer the discounted interest rates because you're paying the insurance premium, right? So if you put more than 20%, so you add like 0.10% more, so 3.59, so the interest rate will go around 3.69, 79, like that. So yeah, that's usually the interest rates are juggling from like how much down payment you have. If you put more down payment, you will get lower interest rates because the risk involved is lower. So yeah, that's pretty much about it. Yeah. You guys have any questions? You can feel free to call me or just pop by. I'm here to answer all your questions. Yeah. We do a lot of pre-approvals also, so you have you get okay, this is the right buyers to move ahead. Like the credit is a significant. If the credit is not that great, it will collapse right now. So the income credit is the most important thing when in the mind. Yeah, property does comes then, but property and down payment, but income and credit is the important for qualification purposes. Yeah. So I'm here all the time, Monday to Friday, 10 a.m. until no time. So yeah, just feel free to give me a call. I'm happy to answer all your questions, queries, whatever you have. Yeah.
Thank you.
Yeah.
Thank you so much.
Okay. Thank you. Okay, there won't be a meeting until January now.
If you're available.
No office meetings until January, yeah.
Yeah? Because I'll show in at 12, and then once it's finished, I'll give you a phone.
I think we haven't met. My name is Samir.
Hi, Samir.
Julian? Okay. Yeah. I saw you a couple of times here. Yeah. Like most of the time, I would say that. Yeah. How's the things? Is this good? Yeah, that's great.
This is good.
Yeah, so far so good. Yeah, getting a little bit of a refinances, transfer deals, purchases are not that great as before.
Okay. Do you send leads if we send you? Do you send business if we send you business to you? No.
Yeah, we usually do work like that way also, you know. Yeah. We always like when I have a buyers, like we always send it to the realtors, right?
Mm-hmm.
Yeah. So I'm in the office, so if you have me, you know.
Very good.
Yeah.
Thanks so much.
We like to go for lunch.
Okay.
Yeah.
Any quick part before she leaves?
No.
Because just to know an opinion.
quickly talk about it.
Oh,
If you
yeah.
have a time. Yeah. When usually happen?
So,
You want to go to the office or?
Email me, I know.
yeah, that's fine. So,
I never heard. I never heard. I think she owns,
okay. Maybe
I
next
think
week.
it's
Sure.
company we can buy
Thanks.
shares, and he pays the maximum 15,000 per year. Yeah, interesting. I think they. She said that she. Sorry. Anyhow, I need to work on an offer. I'm making an offer. Yeah. Buyer.
Bonjour Audrey, Julien l'appareil. Oui, j'ai reçu la notification pour la baisse des prix pour le Prime Pass qui est localisé à 30 francs.
Anyhow.
C'est assez impressionnant, j'en perds minute les mots.
Take care.
Voilà, on est sur un autre produit, Prime Pass,
Do you have a buyer for
vue,
downtown? London?
exposition à l'Est.
Well, those that you
C'est
over.
très important. Et dans le même temps, il y a aussi ce farmhouse. Voilà, il y a des choses qui
You
se
don't
passent sur le
work
marché.
with them?
Tout arrive à point. Je reste à disposition. Audrey, merci beaucoup. Et bonjour Baptiste.
I'll try to get it today. I'll try. But it will get uploaded.